Things are getting worse. Today, the planet is warming much faster than it has ever in human history. Floods, droughts, and heat waves are only expected to increase. The livelihoods are in danger. The lives are at risk. But accountants can save the world. Hello, everybody. I'm Rashid Khan, and I welcome you to the Chapter 6 of Too Weak, Too Strong 2.0. In today's chapter, we will learn how accountants can help make organizations become more sustainable and play their important role in restoring the earth. Thank you so much for joining us this afternoon. Ramadan is almost here. Wishing in advance Ramadan Mubarak to all those who observe, among all the amazing regular attendees of TWTS series. And according to science, the brain actually performs better during fasting. Cognitive function, learning, memory, and alertness all increase during fasting. So we'll continue our webinars in Ramadan and shall aim to conclude the season before Eid al-Fitr. And you continue to impress us with your commitment to learning and personal development. Thank you once again for your active participation. It is heartening to read your feedback and see your certificates getting all the traction on LinkedIn. Before we actually begin today's webinar, let me make a very, very important announcement. Please make sure your MyACC account is fully up to date. All your contact details and payments should be in order. So if you have not renewed for 2021 yet, act now, renew today, please. So you remain fully supported in your career journey and keep smashing one milestone after the other. Strong people never give up on their dreams. So stay connected with ACCA. And just a reminder, there's a highly valuable Future Ready Business Professional FBP certificate waiting for those who will attend all the chapters of this season's Too Weak, Too Strong. So make sure you don't miss this opportunity by attending all upcoming sessions, and feel free to remind your ACCA friends and colleagues. Topic for today's masterclass is accounting for sustainability. We are really lucky to have with us a subject matter expert on sustainability. Ladies, gents, everyone, we are joined by Jimmy Greer, Head of Sustainability at ACCA. Jimmy creates research and advises on policy relating to issues, including the SDGs, social and environmental value creation, climate risk, and business model innovation, supporting ACCA members and future members around the world. He's a member of the Climate Disclosure Standards Board Technical Working Group and Accountancy Europe's ESG Reporting Task Force. He holds an MSc in Globalization and Latin American Development from the University of London. So without further ado, I now invite the master trainer himself to please kick off today's session of TWTS. Over to you, Jimmy. Hope you can hear me.
I can. Thank you so much for that introduction. Hello, everyone. It's a great pleasure, privilege to be with you today for our session, looking at sustainability, and to have so many people join. So I'm Head of Sustainability, as mentioned, at ACCA. Some of you I may have interacted with before. I remember a few years ago, I was very lucky to come down to Karachi, working with my colleague Arif Mirza. We connected with people from the Pakistan Business Council to run a session looking at the United Nations Sustainable Development Goals. And I'm a huge fan of all of the work that comes out of places like the Centre for Responsible Business, and getting to know the issues, getting to understand the terrain regionally and nationally. And so it's always great to be able to connect. And I hope that over this hour, I'm going to be able to cover some of the areas which will be helpful for you, but also that you can also interact with me and share some of the challenges that you're facing. And I, excuse me, I hope that we can cover quite a lot of topics, but at the same time, you know, I'm going to be able to point you to places where, sorry, I need some water, point you to places where you can take a quick course through working with one of our partners, one of our great friends, one of many organizations that ACCA works with, a free course or a free assessment tool for your organization to sort of, so you can go deeper into some of the issues. You know, I'm not planning to do a kind of step-by-step how to do sustainability for your organization here, but I will enter some of the areas that I think are really interesting and important to think about. And I'll put some links out, and we can share some links afterwards. I think, you know, one of the other things to bear in mind is that at ACCA we are really focused on improving what we are sharing in terms of building skills around sustainability for finance professionals. And it could be stuff that's quite sort of, let's say, climate reporting focused. I'm going to have a little bit of a look at that today. It might be more around leadership. It might be more intro kind of level stuff. It might be more strategic. So there's a lot of entry points, and I'm sure you will sort of have seen that in your own work. And you know, I think for us as well, it's worth bearing in mind that people are not only coming at things with their own sort of interests or their own sector-specific issues, but also thinking about different scales, different sizes of organizations, where you're fitting into different systems, different markets, different supply and value chains. What are the types of incentives around improving sustainability performance? There might be stakeholder-led, society-led issues. You know, you may be wanting to create a really great social impact proposition, and that might be a really big motivation for you. It could be that you're working in a sector where there's a lot of regulation. You're looking to improve on that as well, as a kind of primary motivator. Or it could actually be that, you know, the investor side is the primary focus for you and your organization. So how are you trying to attract investors, or at the same time attract capital through better sustainability performance? And for us at ACCA, we absolutely believe that this being driven through the finance team is where it's got to happen. And I really hope that for everyone here, if you're a finance leader, that you are looking to allocate resource within your team to be addressing sustainability issues through finance. If you're not, you're able to go and address your leadership teams and say, look, we need to be looking at this through finance. We can help our organizations to address these issues by looking at it through the work of the finance team. And, you know, hopefully we can support you to do that. And hopefully this session is also going to provide those kind of entry points, those touch points. So to kick us off, last year, we were delighted to run a session with IFAC, the International Federation for Accountants, where the former governor of the Bank of England, Mark Carney, the current COP26 finance advisor and UN special envoy, COP26 being the conference of the parties climate summit that's taking place in Glasgow later this year. Mark Carney joined us. It was absolutely amazing. And he told us that the accountancy profession is absolutely essential in taking climate action. You know, he went through the different ways that legislation is changing, that innovation is happening, that the world of finance is changing, and all of these things will require and do require today a very active accountancy profession to make sure that we can sort of realize, or that our economies can realize the opportunities for managing this climate risk that exists, that is real, and take advantage of those innovation opportunities for transforming as well, because the transformation is a big part of this as well. So what I'm planning to do is run through probably 3 things over the course of our time together, and afterwards I'd like us to have time for some question and answer. And the 3 things I want to do is firstly share some data, some information from a survey of ours, which looked at what members, ACCA members, are thinking about when it comes to sort of the barriers, the opportunities for taking action on sustainability within their organizations. And I'd love to then perhaps, well, I would love to come to you as participants on this session to think about your own barriers, challenges, and what you think about the results from this information that I've shared. And then I want to go into a couple of key areas which I think are really important for us to think about. One, very specifically looking at climate action. for a number of reasons. We'll go into that in detail. And the second is to look at the Sustainable Development Goals, something that we feel can provide this common language roadmap for business and government action today on a range of interconnected sustainable development issues that can build resilience, build back from COVID, and start to kind of transform the way we think about how our economies, our businesses create value over multidimensional value over the long term, over different scales of time, short, medium, and long term. But to kind of think about, where we've come from post COVID, where we want to get to as well. And I think hopefully taken together, that will provide a useful hour of our time together. And once again, I'm really grateful that you've taken the time to join this session, but also that it can provide us with some questions. And I'm sure you'll have questions to ask me, and I'm very happy to be put on the spot and to be and for you to vehemently disagree with the kind of things that I'm saying, or if you're or if not, to be very much in agreement with me. But anyway, onto some of the areas, some of the issues that I think are interesting for us to think about. When we asked members about how much they felt their organizations needed to change post-COVID to address inequality or to do less damage to the environment, we found that yes, members, professional accountants felt that their organizations absolutely needed to change. And across the board, across different age groups and across the sectors and scales of organizations, those not wanting much to happen were very, very few within our surveys. And actually taking significant action was really important to a quarter, and 3/4 or so of members wanted to see their organizations addressing social inequalities and doing less damage to the environment. And we might think that on the face of it, well, yeah, of course we want our organizations to be doing more to tackle these issues. But taking a step back, well, I thought we heard a number of decades ago that the role of business is business, right? Why should business be taking an interest in these issues? So I think it's really important to start to bear in mind changing perceptions of the purpose of the corporation. This is now firmly embedded as the kind of value proposition of what an organization is supposed to be doing. And we found these results didn't really vary that much across the world regionally. And interestingly, it wasn't just younger age groups telling us that they wanted to see action being taken. It was across the board. So, I think we should see that the inflection point has been passed. Action is being asked to be taken by organizations, by companies who have an absolute responsibility to do this to their customers and their wider stakeholders. Now, if you were to take a course, a kind of 101 on sustainability reporting or sustainability management for an organization, stakeholder identification and mapping is clearly the name of the game, right? Your customers, your suppliers, your investors in their broadest sense, government as your other stakeholder. These are the people who you need to be addressed, whose your impact on them is something that you need to be addressing. But there's something else that we want to be looking at as well, which is something I'm going to look at in a bit more detail, is the impact of let's call them social and environmental shocks on your own organization. So there's clearly your impact as an organization on these groups, but we also need to be thinking about, well, what's going to be the impact of, for example, climate change on my organization? What's going to happen when temperatures keep going up, when droughts keep persisting? Am I ready for that change? And am I able to demonstrate that I'm ready for that change to my stakeholders? So those are the kind of questions that we need to be thinking about, both the sort of the impact that we're having, fine, yeah, we understand that, but also the impact on us in a kind of narrower sense on how we create value. Moving on, I think an interesting area for us that we found was that when we asked whether finance teams should lead or support, vast majority were telling us that they wanted to support the work of other teams on sustainability, on building a more socially inclusive and environmentally sustainable future, rather than to lead. And when we probed this, I think what's so interesting is we found, on the one hand, a great interest in collaboration, right? So, this is good. We want an intuitive sense of supporting others within the organization to achieve their sustainability objectives through finance. So it could be through better sourcing, better management of resources, investment in new types of energy or whatever it might be, and using finance to help them do that. And I think our members could absolutely see that that was the case. And I think there's another side here, which is that, it's not just about that sort of leadership quotient anymore. I think we know that actually to achieve results, to achieve them within the timescale required, it's absolutely about the finance team working with others to achieve that in a very collaborative and, you could almost say, a systems-based approach. And that's something that we know is really important, and we're really pleased to see that. But I wonder what others might think about that as well. So just to sort of share a few sort of, just to sort of sum a few of these things up, members were telling us that, helping to build that business case around sustainability issues, moving it out of marketing into a kind of finance-driven approach, a very strategic approach, is something that finance teams can absolutely do. That they're able to act as a think tank within the organization for thinking about the different perspectives, doing some modeling, whatever it might be. And for obviously these very cross-cutting issues to be totally cross-functional. So, clearly, what we think is that all roads point to this sitting within finance. There's a huge role for finance to play, and I hope that that's something that you also feel as well. And I'd be so interested if that is something that you feel, or if you feel there are a lot of barriers to stopping that from happening, because the barriers are really important to try and those barriers, rejections of why have we not taken this forward are really important things for us to unpick, to figure out what are the routes forward, what are the kind of tactics to employ, what are the sort of strategic approaches to employ to help your organization actually address these issues meaningfully through the work of finance teams. When we asked members, what areas do you think professional accountants should be involved in to help their organizations build a greener, more inclusive world, I think we found some really interesting answers here. Understanding and accounting for environmental dependencies and social impacts came out really strongly. Giving more prioritization to creating positive social impact alongside financial returns, probably for me scored really highly, perhaps as a result of COVID. When this took place late last year, we were thinking about COVID a lot more, or thinking about COVID more than pre-COVID. And so actually thinking about that societal impact as being so important, and to give equal priority to alongside financial returns actually matters. So what is the kind of robust process you can put around management of and measurement of what that impact might look like? But other things like using data analytics to uncover areas for addressing social and environmental impact. We know that data analytics is clearly a really strong area for finance teams to be involved in. Well, environmental data analytics is just as relevant within this context. The data sources exist, and it's about putting some processes around those to compile, interpret, and use the kind of environmental and social data that is starting to be created by organizations. So, a range of ways for professional accountants to be involved in helping their organization. And moving along, we're thinking about impact metrics. We're thinking about the difference between impact versus output and outcomes. And so impact being something that is additional and on top, essentially, additional to what you may have already been doing, something that is intentional, as an intentional approach that you want to take to creating social impact, as opposed to a kind of byproduct of what you might have been doing. And clearly there's that data question. I'm thinking about, well, we're already probably doing stuff around data. So how can we integrate some good management of environmental or social data to existing processes, existing governance, existing ERP type stuff? So all of these things are kind of to play for in a way, and it's something that we're absolutely working on within ACCA to support members to develop skills on. And we have a range of CPD on very specifically being developed on a range of these issues, so that you are able to dive in and do a quick course on whatever it might be to skill you up on a certain area. It could be climate, it could be social, it could be data around sustainability. And so hopefully we can sort of support you with those going forward into the future as these move more into the mainstream of the work of finance teams. And I think the other thing to just bear in mind here is that increasingly providers of capital will be asking for better management of sustainability issues, and they want to be shown evidence of performance on that. And again, where is this going to sit? And so even if you don't feel that this is something that your organization needs to take seriously because a variety of stakeholders aren't thinking about it or your government isn't thinking about it in your particular sector to a specific degree, well, actually, capital will exist for you to you'll be able to take advantage of better cost of capital, new pools of capital, looking for different types of non-financial returns alongside financial returns. And so it's just something to really bear in mind of the kind of skill set that you are going to be able to offer your organization going forward. And just a little bit more on skills development. When we asked what are the areas you would most like to develop skills in to help your organization to manage its social and environmental impacts, these are the areas that came out. Things like sustainability data analytics, social impact measurement, sustainability assurance, climate change and climate risk. These are the kind of nature conservation as well, a really, really challenging area that we've just released some guidance on as well. These are some really, I guess, serious topics that finance teams are increasingly becoming involved in. Investors are absolutely on the ball with this as well. So, there is a space here for continuing to, as I see members doing around the world the whole time, getting in touch with me, looking at what they're doing on LinkedIn or things they're sending through to me, to just continually develop, to build on your skills, use existing skills to help organizations deal with these challenges as they're coming up. So I think just at that stage, what I'd like to do is just to sort of run through a few of the things that we're thinking for members and organizations to think about when thinking about these kind of impact and issue areas, is to sort of recognize the value of existing competencies, build decision useful knowledge, not soothful. That's terrible typo there. Learn about all these impact management dimensions and methodologies, and there's so much stuff out there, and I will share some links around some sort of assessment tools, simple frameworks that exist that you can use that might be relevant for your sector or for your the size of your business as well, that are freely available tools that you can use now, or courses that you can sort of build some skills in now. to sort of, to start to sort of build that knowledge base, because I think there is a base level of competencies around this sort of emerging as being important around things like climate, things like social impact for finance professionals to understand, and also for organizations, for boards, for leadership teams to really be up to speed on. And I think that that kind of level alongside that kind of, let's say maybe more specialist stuff when you get onto it is really important. So, I'm just going to pause right here for a second and maybe ask you if that's okay. And I know we've got many people on the call and we'll have some time for Q&A afterwards. If, what are the types of challenges that you're seeing on sustainability, getting it involved, doing it within your organization? What are the kind of, do those kind of numbers and those kind of areas that I've just been through around how to help your own organization, do they resonate? Are they the kind of things that you're facing, the kind of issues that you're thinking about looking at? Are they the areas that you would like to perhaps in the future be working in, have part of your role to be involved in this kind of stuff? Or maybe not. Maybe there are other areas. I'd be really interested if anyone had anything to share in the chat, for example, or with any questions. I'd be absolutely interested. So please feel free to send through anything, and as we go along, and maybe we'll dive into them if they come in. And if not, no worries. We'll just keep on rolling. But yeah, do feel free to share anything. So I'd be really interested to sort of look at any specific barriers or any specific issues which may or may not exist, or maybe differences. So I'm just going to move on now to the next topic area that I wanted to cover up. And this is really specifically looking at climate. So climate and the task force for climate-related financial disclosures. So, there is a huge amount of work that's been going on looking at climate risk as it relates to organizations, so entity-specific climate risk. What's going to be happening to my organization when temperatures rise, when sea levels rise, when maybe regulations change in response to climate change changing, maybe when customers decide actually we don't want to be using these kind of highly polluting products anymore. What are the types of changes which are essentially baked in, they're coming, and what are we doing about it? And the Task Force for Climate-Related Financial Disclosure is a climate risk reporting framework, kind of reporting, but sort of management and reporting framework, which is becoming widely adopted around the world. In some cases being put into hard legislation for listed entities, but in other cases reaching out as a kind of de facto piece of legislation, or de facto requirement for companies to address. So maybe through surveys or others, and actually banks are starting to ask questions around climate risk of their companies. And this isn't just applying to large listed entities, but it's also applying to smaller scale companies as well, who may be part of larger supply chains, or maybe aspire to be part of larger supply chains. So the task force recommendations are split into these 4 categories: governance, strategy, risk management, metrics, and targets. And I just wanted to sort of share a little bit around them, because I think that the direction of travel in this is that it's only going in one way, and improving climate resilience and disclosing that kind of information. It's a huge amount of benefits, both internally in terms of decision making for a business, but also externally as well in terms of demonstrating to, let's say, the wider marketplace that you have a kind of strategic understanding of the risks that you face from climate, and you're going to be doing something about it. So if I just move on to my next slide, this image really sets out what the Task Force for Climate-Related Financial Disclosures and Climate Risk Reporting is really all about. It's about being able to demonstrate how, if you start on the left-hand side, risks from climate change impacts. And they could be transition risks, which are essentially these policy, technology, marketplace, or reputational risks that exist, but also the physical risks from impacts of climate change. They could be extreme weather risks. They could be chronic weather risks, changing rainfall patterns, for example. You know, how you're managing these risks and how you're taking advantage of these opportunities. And crucially, as we work down through the image, what does this look like? What does this kind of mean for future revenues, future future income and future cash flow? And the climate risk reporting framework kind of demands that companies are starting to think about scenarios for what their exposure to climate change might look like. You know, what am I going to look like in a 2-degree world? What am I going to look like in a 4-degree world? You know, what is my market going to look like in those scenarios, and where are my impacts? And you know, we can think, well, maybe it doesn't apply to me if I'm, you know, if I'm not an energy company, or if I'm not using a lot of water, or what have you. But actually, you can see that those physical risks, you may have a larger exposure or not, depending on if you're in agriculture or if you're in services, for example. But actually, the transition risks, these sort of policy risks, these marketplace and technology risks, are actually really where action absolutely is happening as well. You can see it in, let's say, logistics, for example. You can see it in all kinds of sectors will have climate-related risks that they need to be aware of. And you know, it comes down to thinking about wider sustainability issues as well. If you're not managing these risks effectively, what does that say about your wider management of other risks as well? So it's all kind of interconnected and absolutely has a financial impact, and will have a financial impact on sources of capital as well, as people will sort of start to assess, well, what is their exposure to climate risk, and what do they know about their own exposure to climate risk? What's their management of this going to look like? So I'll share a link. We're delighted to partner, to be working with the Climate Disclosure Standard Boards, of which I'm a technical working group member, to support some CPD, 3 CPD courses. I think there's a couple more now on their online free CPD courses that you can take, and we've got a link to that we can share if you're interested in taking them. And to sort of learn more about this sort of climate risk landscape and what it can mean for your organization. And just to sort of go into, just to share a little bit of information on the other types of areas that are covered by this, this climate risk reporting. If you think about it from, what is an investor going to want to know? You know, he's probably going to be want to know, if we start on the governance side, you know, what is the board's oversight of climate risks and opportunities? You know, what is the management's role? You know, who on the board has responsibility for climate risk? What is the type of information that's being created around this, around climate risk? How often is that information shared with management? You know, these are the types of things that that are starting to become more and more demanded as we deal with the impacts of climate change. So what's the resilience strategy of the organization? What does it look like in 2 degrees, at 4 degrees, for example? So all of these things, I think, are really important for the profession to bear in mind, as so many of you now and in the future will be, you know, so sort of, this is all part of the rising expectation on the role of the profession will be responsible for effectively managing the financial impact of climate change. So as I say, there's some brilliant resources out there to skill up on this. We're also absolutely involved in developing our own climate risk CPD as well. So I'd urge you to, if you're interested in it, find out more, ask me, we'll share the links as well. I just want to move on now and touch on one more area, which is just on the Sustainable Development Goals. So we have at ACCA been thinking about the Sustainable Development Goals and the role of the profession for a number of years now. The Sustainable Development Goals, just as a recap, are 17 interconnected social, environmental, institutional, and economic goals agreed upon by all UN member states to achieve by 2030. It's like zero hunger, no poverty, climate action, all these kind of areas. We have supported a number of things like the Sustainable Development Goals disclosure recommendations, the SDGD recommendations, which set out a kind of conceptual framework for professional accountants to use to think about their own kind of impacts and opportunities around the specific goals that might be relevant to their own organization. We've looked at them from a kind of public sector point of view as well, thinking about how countries are effectively monitoring their own approaches towards achieving the Sustainable Development Goals, what progress are they making, how are they being held to account. And we've just looked at the kind of different sort of frameworks, other frameworks that are out there for measuring impact on the goals. And I think the thing to bear, and ACCA itself is probably worth bearing in mind, like many of you may have seen, we've made our own commitments to the SDGs, looking at which SDGs are most relevant for ACCA to be challenging, to be tackling, to be contributing impact toward, positive impact towards, and trying to sort of transform the way we take on those goals and make them a real absolutely interconnected heart of our own strategy. And that's something that we've been doing over this last year, and it's been a really brilliant process to be involved in. I think the reason why I wanted to share the goals and why I think they're so important for us to think about is that, this isn't just about large entities, although it's important as well. We're thinking about innovation, the future, the types of economies that we want to be building, the types of amazing businesses and organizations that we want to be a part of. We need to be taking on the kind of systems that the SDGs will help us address. And the SDGs provide us, as I mentioned earlier, with that kind of common language for dealing with these issues. So the World Benchmarking Alliance, an amazing organization, has come up with this quite neat little frame for thinking about the goals, thinking about these 7 systems of transformation, the social system, and then the sort of food, the circular system, digital, urban, and decarbonization, all supported by the financial system, that are the kind of ways in which our economies function and how the SDGs link into them. And when we're thinking about, this isn't, as I mentioned, just about risk management. This is about sort of future areas of opportunity for transforming what we do. And where are the growth areas in terms of building great organizations, great areas of employment opportunity for the great jobs of the future, the great companies of the future are going to be in these kind of and this is just a highlight I've taken from a wonderful piece of work that was out a few years ago from the Business and Sustainable Development Commission, looking at these different sectors across these new areas of the economy, across food, cities, energy, materials, health and well-being, where activity is happening, right? Where we know that our economies are going to be based around in the future, because we need to change, we need to transform. And it's not just about saying, well, these things are going to be happening. As I sort of mentioned a bit earlier before, this is where money is flowing into these areas as well. So lots of opportunity for taking action, lots of opportunity for building brilliant careers within these new areas. And sure, some might be more relevant than others, depending on what might be of interest to you, but or what's happening in your particular sector, state, country. But absolutely, these are the kind of some of the engines of where the future of our economies are going to be going. And just to sort of round it off, on the capital side, let's not think about investors as being solely kind of these, this sort of MSCI type, large listed entity world, although of course that exists and that's great. There is a spectrum of capital out there looking for social and environmental returns, and they're looking for it across different dimensions, right? They're looking at it from, some are looking for sort of high impact on the right-hand side of this chart. So they're looking for you to really be able to demonstrate those social and environmental returns in a really strong way. Some might be looking for just a kind of a decent sustainability management approach that are sort of, securing value, creating more resilient organizations. Some may be looking at it, as we mentioned, from a kind of, public listed entity type of view. Others might be looking for a kind of tilt, a specific thing. I want to support a specific sector or a specific issue. Linking that back into the goals should be looking at very specifically looking at water, looking at entrepreneurship, looking at energy. There's all these different, more and more, increasingly there are different types of capital available across the sustainability spectrum, packaged up in different ways. It could be in sustainability linked loans, it could be in kind of the more bond type space, it could be in just different types of debt financing. Increasingly, this capital is significant and scaling, and so you're going to be able to access it, and you're actually going to be asked to access it. So how can you help your organizations to access that type of capital? So on that note, I want to end, and hopefully that has provided a bit of a snapshot as to the types of things that I think are really important for us all to be considering. What I would like to do as well is share a couple of links in the chat whilst we've still got time, but I would really encourage you, if you have any questions to put to me, please do. We have some time left, and I'd be really grateful to hear from you about the types of challenges that you're facing. And so maybe if you have any questions, please do share them, and I'm going to share the links to these courses and some podcasts as well in the chat.
Thanks, Jamie.
Now that I'll hand back over.
Yeah, that was packed with so many insights and such great learning for all our members and future members. So thank you very much, Jamie, for that. We've received a lot of questions, so I'll read them out for you so you can answer them one by one. But before questions, just conveying there's a lot of praise that we've received for you. So thank you very much for doing this session for us, and people are waiting for the link, so you can continue pasting the links so people can take benefit of all these exciting resources and courses. Okay, so we have a question from Omer Ijaz. Not sure if it's a question or a comment. Let me read it. We should try to calculate value to a company in following more sustainable processes instead of the cost. Right now, companies see investment in sustainability as the cost of advertisement. There should be real value addition to the business. For example, we can show that one process is better than the other, not because we can advertise as a sustainable company, but mainly because it is more efficient and reduces the cost. So, Jimmy, the question is, what companies do to just be seen as sustainable, or the things that they should be doing in terms of creating the impact that you actually discussed in detail. So what's your take on this? Companies just doing certain actions just to get more advertisement space or just to get more PR for their
Yeah, sure.
sustainability efforts?
I mean, on the one hand, that's the world we live in. That's where we've got up to. But I think the question is absolutely spot on, right? How do we move it away from just being about, let's call it marketing, out into stuff that is decision useful, that can help you make decisions, and that's about effective management of these issues, but also looking at the simple stuff like the on the one hand, there's kind of there's a load of resource efficiency stuff, which is obviously cost saving, but there's also resilience around a business model. There are all kinds of opportunities here to move it from one side. And look, let's be clear. I think sustainability for marketing purposes, if it's authentic and genuine, is great, and we want that to be happening. But absolutely, we're hopefully seeing this change into it being much more about taking decisions that have a strategic impact on the organization. And I think there's probably another thing to bear in mind here, which is that you can still use if you've been effective at managing your environmental social risks and done it through finance, you can still use that for a marketing opportunity, right? But the primary purpose should be to help transform your organization and improve it and make its proposition much stronger and much more resilient. I think there's probably another bit in here, which is that if you're a smaller organization and you're trying to do this purely from a PR exercise, we see time and again that transparency uncovers unscrupulous practices where maybe PR may be being used to a great degree, and that does have a negative impact. For smaller entities, that can be even worse, right? That kind of the hit to reputation can be really severe as well. So I think it's an absolutely spot on question, and thanks very much for asking that. And just to let you know, I've put some comments, but I think I put them into our chat as opposed to attendees chat. So I just let you know the links are there. I'm not exactly sure how to share them to a wider group.
Don't worry, I'll do that for you.
Cool.
So thank you very much. You've rightly put it. Greenwashing is bad, but then we need actually the positive role models and sustainability trailblazers. It's good if they get recognition for all their sustainability efforts. So we have another question. This is by Muhammad Khurram Shabir. Khurram is asking, could you please tell us about Sustainable Development Goals disclosures? Would we have new IFRS which would make it these disclosures necessary?
Yeah, no, that's a good question. I think one thing I didn't mention is that there is, and I'm sure you're aware, there is work going on at the IFRS, IFRS Foundation's trustees board to look at IFRS for non-financial information. This process is going to take quite a long time, but the wheels are in motion. The first starting point is going to be on climate risks. So it won't be for a while, and I think there is a debate to be had around. How can I say this? There is a debate to be had around the kind of scope of those disclosures. So, we want companies to be able to effectively disclose their social impacts. The question is, to what extent do you need an international accounting standard to make that happen? Actually, you can do that now. Whether there will, in time, I'm sure the SDGs will be incorporated, elements of the SDGs certainly, but I think we need to sort of be realistic that in the near term, that isn't, that's not going to be around next year. So as an alternative, we feel that the SDG disclosure recommendations, which I have mentioned, are a great way to start looking at this yourself. And actually, there are tools that you can do to start measuring this impact now. So getting a company in shape is not dependent on a new IFRS standard. So I hope that answers the question. Very good question, and we're very committed to engaging as much as we can on the development of this approach to non-financial standards for IFRS.
Right, very well. We have another question. This is by Yapka Kundi. Yapka is asking, in her words, making an organization environment friendly has its costs. Some organizations, if they take certain steps to implement their eco policies, will reduce profits and thus shareholders get displeased. So how we can implement sustainability goals if shareholders want high profits and are not willing to cooperate with the management?
I mean, there's probably a few answers here, aren't there, that I think we can think about. Are we thinking? I think the whole ACCA is very clear that we are trying to support organisations to create, lasting, enduring value that is kind of multi-capital. Thinking about the integrated reporting, and I think, but also we should be aware that, let's face it, there are some investors who are looking for high returns and don't want to be putting that investment into sustainability. But the downside risks, if we want to talk in that language, of not addressing these, I think should be enough to warrant some action. And at the same time, I think the growing different types of capital that are available, and by that I mean different investors who are around, the crude answer is maybe we should get some new investors, right? That's what we would love to happen. But actually, we know, and we actually saw, there's a great example in the papers of the CEO of Danone, the yogurts company, losing his position, and Danone had become a huge, super sustainable, brilliant organization, amazing commitments, but shareholders, to some extent, and for a number of reasons, not just related to sustainability and purpose-related goals, became impatient. So, I think there is a challenge there, and I think one of the problems for making it stick is that it's not sitting within finance, right? It's just not managed effectively, and the controls aren't around this kind of environmental social impacts that there should be, that you guys know very well can be. And I think that we can make this shift happen, and we can create the market for this to make perfect sense. If it's done in a haphazard way, well, yeah, I mean, it's not going to, there isn't going to be a return. So I think it's difficult. I think it's an important question to bear in mind. We can't be as glib as saying, let's just get some new investors. We need to understand the pain for those investors and why they bring them to the table. I think the other thing to think about are what are the tactics for making it happen, and things that we see as successful are things like pilot projects. So thinking about a unit that might be sort of looking at, maybe for a business unit doing a kind of pilot around what they should be doing, or maybe addressing a specific issue might be a way to do it, and sort of demonstrating the results of that, doing it effectively, and then trying to scale it up can be a way to kind of not have to have that sort of large hit all in one go. It might be a way to sort of give those proof points that are needed, if they're needed at all. So yeah, thanks for that brilliant question.
Yeah, and this reminds us of the bedtime story we used to hear when we were young, the goose that laid the golden eggs. So I think it's always ideal that you look at sustainability and not just short-term profits. What if there is no company, there's no planet to live in. So first things first, so we have to focus on sustainability, so we continue to get profits in the years to come. So Jimmy, we have another question from Ayaz Javed. For greener environment, we can digitize finance operations, but don't you think in digitization we can call paperless environment? People will lose their employment. On one hand, we're digitizing our work to make greener environment, but on the other side, we're losing people. Please have your say. So it's more like sustainability versus jobs. How would you
No,
answer
and
this?
I think look, there's going to be something happening here, and that's a great example. But there's clearly loads of other areas where some jobs are going to be impacted by this transition, whatever it might be. In one case, paperless, but it could be another. You could think about some sectors where we want to be sort of winding down versus others winding up, and where technology displaces people in any case, right? And I think that's a real issue that needs to be massively addressed by policymakers to a scale that just hasn't been even thought about before. I mean, if you think about it from an automation point of view, to what extent are we willing to automate something? Now, there may be a paperless benefit or not. To what extent are we willing to introduce robots, in inverted commas, and diminish employment? What is the kind of fine, labor-saving technology is great, but are we willing to lose a load of employment just for the sake of automation? And I think that there's a huge issue around incentives, and governments being really clear that, and companies to that extent as well, being really clear that there is a jobs transition cost, and it goes into these social equity questions as well. And if you're if you're interested in this, you need to be making those calculations to include people as well. And I think there's another side to it, which I think for me is something which is happening, which I love, which I think we're really committed to, is, let's say we want to decarbonize the whole economy, the whole global economy, whole national economy, our regions, global economy. The displacement of people out of high carbon sectors is going to be enormous. There is a whole movement around the just transition. So how can we make this an equitable transition? And that is about retraining and creation of new jobs within new industries, or industries that are supposed to, we want to be growing. And that also has huge problems, because there's, some of these are place-based as well. It might be certain regions are going to be, more hit than others, and people can't necessarily move to these new areas. So investment needs to happen that is very place-focused as well. So there's a huge, this is, if taken seriously, the greatest mobilization of kind of capital and government action that will ever happen, because we can't really, if you factor in displacement through automation alongside displacement or people losing their jobs through shift to green, we can't live in that world where there isn't any action on the other side. And I think companies are starting to take this seriously, and I think governments are starting to take this seriously as well, particularly in light of COVID. The question is how, we don't know where we're going to end up with that yet, but I think it's a real question. And I think that, if we, I kind of need to stop talking about this because I think it's such an interesting question, but if we were interested, let's think about something like globalization in the 90s, and when let's say labor costs were lower in some parts of the world versus the US, huge displacement of manufacturing jobs. As this low-cost labor, prices rise, people move around, but to what extent do we value that efficiency and that convenience and that sort of cost over someone's livelihood? And obviously we went too far one way over the last couple of decades. I don't think we're going to go too far the other way this time around. Of course, it requires concerted government and business and civil society action. And this is the great challenge of our times. But yeah, thank you for that. Another amazing question.
Very good answer, Jimmy. And we can always strategize a win-win situation for everyone, everywhere. So we've come to the end of the session, but we'll just take one more question because I think it's a very important one. So the question is from Alina Kareem. She's asking those who are interested in building a career in sustainability, especially those who have qualified ACCA, please guide which qualifications are appropriate after ACCA for capacity building regarding ESG, sustainability, and climate-related reporting. Also, please share if there are any opportunities for internships or hands-on experience in this regard for young professionals who are interested in building a career in sustainability.
Yeah, thanks. That's a great question. So ACCA will soon have a whole range of CPD, which I think are going to be really helpful and useful for skills development and hopefully to demonstrate that skills development, that sort of proficiency in these areas. You know, there are other things out there that are great, and I've shared a couple of links to them. But the one thing that I'd say people can do, if you're a younger professional, you're looking to sort of, and even if you're just looking to sort of develop some skills in this area, is maybe it's in a sector that you're working in or not, or something that you've just got a particular interest in, is support, get out there and figure out who, and reach out to alliances, not-for-profit networks, multi-stakeholder networks who might exist, where you can be part of a wider systemic group that's trying to take impact in an area and try and develop those skills, you know, working and learning from others who may be operating in this area as something that you can learn from alongside what you may be doing, to then, you know, build a wider view of what's happening, take your finance skills to help smaller organizations. They could be not-for-profits, they could be impact organizations of any kind, community-based groups, because I think that's where, you know, I've seen time and again that these skills that are developed, well, what's happening in those kind of areas that have been doing this kind of impact related work for such a long time are now moving into the mainstream. So if you can sort of work with people on the ground and really develop that at a sort of grassroots level, it stands you in excellent stead for taking that, marrying that alongside your finance skills, and taking it inside an organization where you may want to be applying for a role or demonstrate your capabilities and your commitment. It's not just an interest, it's your commitment to it. But I'd say that for all members is really relevant to go look at what's happening in your sector. What, you know, if you're in buildings, well, it's all around concrete, it's all around you know, those kind of areas, and think about being part of sectoral alliances, because that's how we're going to move further, faster, and you can really contribute to change in a really high impact way.
Very well. Thank you very much, Jimmy. And thank you for your time. Really appreciate you doing this session for us. And thank you everyone for participating in this webinar. We'll be back with the chapter 7, which is going to be a very, very useful session for you. You'll get the details in the email today. We'll also send you the link of a recording from today's session. So those who joined us late will be able to listen to the recording. And if you want to connect with Jimmy, you can probably go on LinkedIn and find Jimmy over there, and he'll be more than happy to assist you in your sustainability journey. So thank you very much. Have a good one. Take care. We'll see you soon. Bye-bye.
Thank you very much, everyone. I really appreciate it. It's been great to share all of this with you. Thanks for the brilliant questions.
Take care. Bye-bye.
Bye.